of more than 30 years, in which he has managed business in about 5 countries. Big round of applause for Dr. Ravi Mudani. I also request Sri Subhash Chandra Gehlot, Regional Director, Bikaner, Rajasthan, and Director Audi Motors Limited, a platinum dealer of Maruti Suzuki. He's here with more than 40 years of experience in automobile industry. A big round of applause for Mr. Subhash Chandra Gehlot. I request Sri Shashank Kaulji, Director, Restaurant Turnaround, MBA from IIM Kozhikode, EY. He brings with him the best-in-class 14 years of experience in field of mergers, acquisition, financing, restructuring, and stressed asset management services. A big round of applause for Sri Shashank Kaul. Director, Restructuring and Turnaround, EY. Can we hear a little more for all of them on the stage? And I once again welcome Sri Subhash Chandra Gehlot ji, Regional Director, Rajasthan, who would be moderating the panel. Over to you, sir.
Our topic is financial prudence. Mr. Ranjan has already elaborated on the subject, but we'll go into detailed discussion with this eminent panel. We all know that finance is bloodline of our business. Still, some of us are unable to manage it properly and fall into problem. And this is the question I would like to address to Mr. Bhaskar. What is his opinion and what is the reason they fall into problem and what are your advice to them?
जेनु काम तेनु करे बीजा करे खोटा था ऐसा बोलते हैं. Firstly, to advise a set of businessmen कि मैं क्या गलत कर रहा हूँ. ये people take decisions, it goes wrong. Nobody takes a wrong decision. My personal experiences, and at least in the automobile trade, for one, for sure, I know that this is something that most dealer owners have done this business. If you look at the ones who have started this business earlier on, they have had much larger margins. If there is one change, there are many changes. Compliance has become bigger. There was not so much of a supervision. I think now there's a cost of compliance. I think there's a cost of supervision. Now there's a cost of, earlier land appreciation used to be considered as profit. Now that is not being considered. So many things have changed. But out of my own experience of having handled Mahindra & Mahindra, I've handled some big dealers in Bombay. One of the key things that I have noticed is the people who have the people who have kept the money in the business have actually managed to stay afloat all times. When I say all times, good times, bad times, they have been able to stay afloat. If there has been that one particular discipline made in the family, in the business house, whether it is, though it is family run, but that one golden rule that the money earned from the business remains in business is where it is. Generally, I have seen things going right. A. B, I have also noticed in the quest of doing retail, bankers like us, we have also made money more easily available, which, when not used prudently, has actually gone into other investments which may or may not have given the same return. Nobody likes to say where you lose money. I mean, any of us, if we lose money on a share trade, we generally don't talk about it. So what I have seen that many of people would have lost money somewhere else, but then it's very easy when you meet the principal, when you meet the financer को बोलो rate कम करो, principal को बोलो margin बढ़ाओ. दोनों नहीं होने वाले. That's my very commonsensical, because I don't think that any businessman needs advice. Genuinely, I think because we do business, you are much more endowed than us. We just work. The two of us, we just work. So you know what happens, and it takes a lot of guts to be in the ground. But according to me, as the country is getting more organized, more compliant, it is very, very important that you will have to decide whether a little. Not one thing will change anything. According to me, a little of it, little of used business, a little of spare part inventory control, a little of efficiency in the dealership, a little of productivity. Like मेरे को हमेशा लगता है कि हर dealership में फाइनेंसर का आदमी और डीलरशिप का आदमी सुबह के 10 to 1 मैटिनी शो है. YouTube देखता रहता है, WhatsApp देखता रहता है, काम तो नहीं है. तो क्यों आता है सुबह वो 12 बजे के पहले जब कस्टमर ही 1 बजे के बाद आता है. And this question I have to my finance. Everybody comes to the dealership and they're all sitting and watching YouTube because 10 बजे कोई customer तो नहीं आता है. So, is it good to work half a day or is it good to have rotational? I don't know, but this is a question that I would believe parts of efficiency, keep the money in the business, probably is something that comes to our mind from my side.
Thank you. We all know that the diversion of funds is dangerous. Mismanagement of short-term, long-term funds is dangerous. What is the legal aspect right now and what are the RBI changes that have been brought into this? Could I ask Mr. Sudan? Okay.
Hi, good afternoon. So, as Bhaskar said, this particular eminent dealers, I'm saying successful people, they are in the business of managing risk. They have been self-made. People are running to a first generation or second generation of entrepreneurship. So, different model of success has been made by each other generation. One thing which has always been true is market keeps changing. And the changing time, if one doesn't change, I'm saying is, then we get into issues. The question posed to me on this change is the diversion of fund. This word diversion of fund was never existent 2 years back. Few years back, all of us understood any limit, whether it's working capital or term loan limit given by any banker is my own money. I am free at liberty to spend that money on any use the way I want. But the end use is what the small nuances which people have not read, which is called a diversion of fund. So once you know that bank has given you a money, a working capital, where you use only there to run day-to-day business, where you are only servicing interest, and as Bhaskar said, it's the money which has to be there. One should not use that money to create a long-term assets. Once you start creating a long-term assets from your circulated money, that's called diversion of funds. Now, a lot of people believe that as long as they are servicing the interest, okay, bank has nothing to, I'm saying is worried about because there is no default, there is nothing. Now that's where the regulation comes in, and I'm just trying to give you a legal meaning, not to scare the community here. So the first cause of diversion of fund comes in when the bank will ask you, I'm saying there's a stock mismatch. That's the first step in any business, I'm saying automobile business. And after the stock mismatch comes in, now there is going to be additional prudence which will be initiated by the financer in identifying where the money trail has gone. Now, which normally I'm saying is a different point of time people have followed formula of putting money into a long-term assets where you will be given a time to restore that money in a very short time. And even if you are servicing the interest, the regulation, the last end is also encourages bank to report as a RFA. Now once you say it's a RFA reporting, which basically means it's an offense, it's a legal offense from a banker's side, and we are being asked to put up a report to vigilance, to the different, I'm saying, law enforcement agencies, and they will get into this. Now why we are telling you this verse first before the bad part of this is, that's what the regulation is, not that bankers are choosing to do this. The regulation says it's the people money. All of you entrust your money to the banks to safeguard it, to give them only a small change of return. If anybody is not spending that money prudently, you bring it to our notice. This is in the event. And we all know the way this country has been tackling the NPA crisis to remain healthy vis-a-vis a lot of other countries. So this diversion of fund is very clear that whatever end use you have declared while claiming a loan, you have to keep that money there. The golden rule, Bhaskar is again repeating it, I am also repeating the money. All the money, 4 to 6% is the minimum return all of you make in your core business. If that remains, there will be no issues. The moment you start doing mindless, reckless spending out of that money into a non-core area, that will be treated as diversion of fund from that entity. Not at your next, I am saying his venture has any other lack of potential or anything. But try to value that potential of that new venture separately rather than mixing your overall enterprise limits, which you all guys are used to. Hope I have answered.
Yes, you have answered, sir. Could I just make a small comment here? That at times when the fixed income fixed assets investments are required by the business, bankers are rather slow in sanctioning and it takes a lot of time. And my dear friend get into the trouble of using working capital inadvertently and they fall into trouble. I think that is now in your court how to make it faster.
So if you ask me, it doesn't take much time in Yes Bank for sure. Okay. Now, on this, yes, the long-term funding, when you're talking about term loan, requires you to take a view on your entire business because you have to repay that maybe in 5 years, 7 years, at times 10 years, depend upon, I'm saying, is what the end use is. So there will be a more documentation. The time is a parallax of a more documentation. Now in a working capital, the idea is you may get a little leeway in documentation, but when you say time, that's a misnomer because we take most of the times close to 30 days in creating a charge after even the approval. So availability of money do take the same time if you ask me today. It's just that certain documentations are little, I would say only in few cases, a little lesser than in the working capital than term.
Thank you, sir. Now my question is to Mr. Ravi. Please explain what is factoring and how it is relevant to our business. And is it different from bridging loan that used to be?
Good evening, thank you so much. Factoring per se, bridge loan is totally different than factoring. Yeah, but people might connect it to the traditional way of invoice discounting. So factoring is, so invoice discounting, the entire recourse of the liability was on the seller. However, in the factoring, it could be a disclosed and undisclosed. Similarly, it could be a recourse based or a non-recourse based. So why factoring is important, I think, Rajan also mentioned earlier. See, the cost of fund which we always say 6.6%, in fact there is also a cost of getting that fund as well, right? So if we typically make that entire mass, very few people can take that kind of money, number one. Secondly, with cheap money, we tend to get spoiled. So when we are talking about the diversion, it becomes much more stronger in case when the money is cheap. Thirdly, it is, so I think the world is moving to more transaction-based things now, right? So even the financing is more transaction-based. So what you pay is what you use for. And that is where the factoring comes into place. So factoring per se is like, selling your debtors to a factoring company and getting the money upfront. There are three important points to factoring. Apart from getting the money, you're also covering or hedging your risk of a bad debt. You're also getting your debtors into discipline. So it might cost you more in terms of a transaction, the rate of interest in terms of transaction, but eventually the people are more happier because in the absolute amount when you pay at the end of the year is less than what you pay to your CC limit running it for the entire year. So a very important part in factoring, and which is not the invoice discounting, is also the acceptance in terms of disclose. And with the Factoring Regulation Act 2011, which has been modified last year in 2021, the power in terms of recovery has become pretty stronger with the factoring companies. So I'm sure this is going to be a product for the MSMEs. Till now, it was being available to all the corporates. The banks were using it into corporate financing. But this product will be available to the masses, MSMEs. Because it's also covering a credit insurance. So it's basically giving you insurance against the bad debts.
Thank you, Ravi. And could you also elaborate whether the government supplies, CSD supplies, all that are covered in factoring business?
Yeah, per se, yes, the government supplies and CSD are covered under factoring. The only part it is not a disclosed factoring because the government doesn't accept the bill. Of course, it's an undisclosed factoring. The invoices can be bought. On the contrary, we have done a program with the Government of India, which is a GEM, Government E-Marketplace, where the government is, so NBFCs like us are financing the transaction which people are supplying to the government. So all the erstwhile CSD is now through the GEM only. So anybody supplying to the government is paying the money to the banks and the SDFC, and the supplier gets the payment upfront.
Thank you. We all know the money should be used properly, but there are chances somebody may get a negative working capital and fall into problem. What are the options of turnaround for him? Mr. Sushant, I would like you to answer that. Thank you, Subhashji, for that question. I've been associated on this particular area for the last 6 years with Ernst & Young. And this is an area where we have seen a lot of back and forth in the regulation, specifically from the Reserve Bank. And there have been multiple circulars which have been issued as guidance to the lenders and then been rescinded, reissued, and then been struck down by courts, and then again new issuances happened. So currently there are, at least to my knowledge, there are 3 important guidelines which are in play. 2016 Master Restructuring Circular issued by RBI. 1st January 2019 restructuring as applicable to MSMEs, and 7th June Circular popularly for large corporates as of 2019. And all these 3 circulars basically provide a window opportunity for a business where there might be some material mismatches in working capital or could be facing some kind of financial difficulty on account of certain past actions. Now it's important to note here, as Mr. Sardana had said earlier, that banks are being forced, or I would say are being mandated to undertake these through the actions of the regulator, which is the Reserve Bank. They are not doing this out of their own compulsions, but they are doing it because it's becoming the law of the land. And it is in the best interest of the larger business community to sit down with their respective banker at the earliest point in time where this kind of problem is being envisaged or is being seen that it is going out of hand, and to find an amicable solution. Because the banks are also trying to find solutions to the problem, because the banks will not want to necessarily red flag an account or classify somebody as a willful defaulter, or classify somebody as who's doing some fund diversion, etc. Because that has many other criminal implications. So these extant regulations, as they are available right now, allow a very good window opportunity to have a bilateral discussion with your lender, and there could be more than one lender that might be involved, and you can come up with a restructuring plan which will allow you some leeway to in a disciplined, time-bound manner. And at the end of the day, all the other themes that had just been mentioned, transparency, timeliness, discipline, all of these will be enforced upon you, and therefore, as it was suggested in the earlier session, it is best that the businesses start taking it up on their own voluntarily.
Thank you. The one problem comes that a lot of finance is made on INF basis, supply basis by the manufacturer to the dealers, and at times the billing option is with the manufacturer. So or wholesale or over stocking happens by now whenever the pressure is there. How to avoid that, and what changes banker can bring in the system that dealerships have more say. Not all the dealerships, all the manufacturers have this problem, but few of them do have that.
So, working capital, if you ask me today, also is going through a small changes in terms of technology. It is something when you are talking about, if my question, the way I understood is, you are saying manufacturers are billing dealers indirectly through their depots. Is a question?
Because they have the leverage.
Yes. That business, if you look at from last 10 years, is only coming down, where the people are only billing, and wherever it is there, we are also working with a lot of top manufacturers where they are also giving us access from a depot billing also to them, where we can try taking a win-based tracking. And once the win-based tracking happens, I am saying that the facility which you want in terms of transparency and fastness of this thing will get incorporated through a ERP solution from a dealership to the finance. There is no stock gap there.
Incidentally, inventory funding is something which we as a bank yet don't offer, in the sense that we give trade advance, which is a little more based on understanding of requirement versus retail. So that's, well, it's a product in the making, but frankly, like somebody told me during lunchtime that the chip shortage is the best thing that has happened to the dealership. Discount dena nahi padta hai. So Similarly, would be a situation that, in my mind, is that manufacturers will also have to get into, it's a not one person move. What a banker can do if in spite of that the manufacturer decides to be. So,
I agree, sir. But your terms and conditions sometimes even don't require consent of the dealer. That is absolutely
fine. That's only a change of consent.
And both the bankers, I would like to ask what is the best financial structure for dealers? What is your advice on them? And how to leverage finance in a different category like fixed, working capital and factoring?
How to get married to the best girl? How to answer what is the best structure? Genuinely, I have seen, at least in my experience, I have come across a chartered accountant run dealership. Very big dealership of Maruti, multiple franchising. मैं 25 साल से देख रहा हूँ उस डीलरशिप को. वो हर कैबिन का लाइट का बिल अलग आता है, वो सीईओ 25 साल पहले. वो 2 तारीख को he had multiple dealerships. तो हर डीलरशिप का सीईओ को 2 तारीख को उसका बैलेंस शीट बन के आना होगा कि तेरा इलेक्ट्रिसिटी बिल इतना हुआ, चाय इतना पिया था 2 तारीख. The month ends on the 2nd. That CEO. And then the coming Friday, he would have to show cause. अब चलाने वाला 25 साल से ऐसे चला है. Now, and I used to be surprised that very, very big name. So I used to be surprised कि इतना, and that first week used to be terrible because the CEO used to tell me I have to go and give him justification. चाय क्यों बढ़ गया? 1000 रुपए का डिस्काउंट हो सकता है. शायद अभी भी 2000 के ऊपर डिस्काउंट होगा तो खुद साइन करेंगे. तो उधर का पहले द सेल्स पिच इज टू बी दिस इज द बेस्ट प्राइस, कहीं और से लेना तो लो, बस इससे मैं आपको जो डिस्काउंट देंगे. सो आई डोंट नो, एंड ही इज वेरी सक्सेसफुल. He is successful and he's on. And in my mind, one of the dealership which I think another generation, because I thought what happened is that as a process he made it cost sensitive, discount sensitive, and in order to create that, having set that culture, he made some processes aligned to that. The second day balance sheet coming, strong accounts team, strong everything documented, nothing on cash by discount दे देना उसको, वो accessory लगा देना. Even putting an accessory was documented. He would have only 4 accessory to take box from, get it signed off from accounts, and only then they could do it. So if you ask me, that I thought was maybe one of those kinds, and I'm sure each one of you are doing your own way something or the other, but a little of everything is what comes to my mind.
There is an element of term loan for working capital. Do you propose that they should be structured into financial structure?
Term loan for?
Working capital term loan.
Yeah, which is basically term loan. Basically term loan. Paid it.
Sometimes we face problem because when you are scaling up your business, at that time that your contribution to the working capital comes into question. A lot of people go for that term loan for working capital. Is it the right way of doing it?
Do not know how, what will be the end use of that. Now, if somebody is going for property buying, then maybe...
In a business, the volume of working capital is huge. Matching 25% is a Herculean task. And it can suddenly jump because the manufacturer, the demand, supposing slows down a month, our working capital requirement goes up.
Yeah, correct. Because of the model mix and the entire range. I mean, if you ask a banker in terms of from a risk point of view, he would always tell you, take what is needed, not something more. But if that is what gives you that, there was one interesting data point that if the money that you're going to earn by having that inventory is more than the servicing interest.
Otherwise, nobody will take finance. That is obviously there only. Like I tell you, if the Diwali is coming, so a lot of stocking happens, and we all take care of it in a different manner. And how about factoring? How can it support us in our working capital?
So factoring is like a top money, So when you start a machine, you require big kind of power. So it gives you more power. At the same time, it gives you more output. At the same time it consumes more power. So for example, whenever there's an erratic demand or there's a short-term demand where you want the quick funds, top funds, that's where the factoring can also play an important role. You were discussing about the term loan and the working capital. So basically, I think you were talking about the promoter's contribution to the working capital as a component, in terms of getting it financed, right? I also believe one more thing because, I think the corollary of what business is McDonald's into, So I guess a lot of people must have seen that Netflix documentary, right? So maybe everybody would say McDonald's is in the business of selling burgers, but McDonald's is in the business of real estate. So if you see, whenever there is a property developed anywhere in the world, that will be the anchor customer, to go there, and then they will bring all the customers. So similarly, if you ask me what business is it a dealer into, automobile dealer into, right? I would say he's into a business of managing working capital. The rest, all the principals can take care of that. I mean, the car is sold by the principal, they have the DMS, sales teams, blah and blah. So only thing the entrepreneur is left out to manage the working capital, right? And being a trading business, unfortunately, the dealers are left out with a very thin margin as compared to any other traditional businesses. On the contrary, they are, they have been pressured with all the fixed cost, components of our industry, manpower, interest, rental. So everything that are fixed cost. I think so. The best way the factoring can reduce is at least the interest component can move away from a fixed component to a transaction-based component. So that might help, especially people who are into the distribution or into the spare parts and stuff like that.
Thank you, Ravi. I think we have discussed our point. Anybody would like to add something? Prashant?
So, I think from a working capital point of view, as correctly pointed out by Mr. Modani, the business which are working capital heavy also automatically are exposed to industry cycles. And unfortunately, as we have seen, at least in the last 4 years, industry cycles have become more erratic and less predictable. And as a consequence, there is always a need to have additional layer of capital and preferably a cushion, if it is equity or equity-like capital, which could be available in business or could be available in the back pocket of the entrepreneur to protect the businesses. And this is unfortunately also becoming the reality when we are seeing more competition coming in from, say, like the larger, more organized players. Because at the end of the day, what do they bring to the table? They are also able to bring in this capital which is available at cheap cost, which is financed from sitting in the Silicon Valley, and that is what is overpowering this, and Amazon, etc., are good examples of this. So, for a working capital intensive business, there is always the requirement to have a weather eye out to see what is coming up on the horizon over the next 3 months, 6 months, and it's extremely difficult to predict. We all have seen what has happened because of COVID. We have seen what has happened because of the chip shortage. There could be a chip surplus all of a sudden, and then the entire industry dynamic can change, and that will have its own negative consequences. So this is a problem which has to be grappled with, and therefore the advice which is there, which was there again earlier, that having a strong CFO, having a strong system, Mr. Bhaskar talked about that. A strong accounting system where every penny is accounted for. Not necessarily people don't have to show cause, but at least a system in which tracks all the money, where it is coming in and where it is going, and accordingly, you can make your policies against that. There might be some money stuck in some, say, like investments, but are these investments available to me during a rainy day? So, one always looks at real estate and others as a place where you are never going to lose money, especially in a country like India. But many of these investments, unfortunately, are not available when you need them because of their inherent nature that they are extremely liquid. And that's where other concepts like factoring, bill discounting, etc., are coming in, and because of that, the balance sheets apart from all the compliance, etc., are becoming complicated, and therefore having a professional team handling all of this will actually reduce the burden on the entrepreneur directly, and then from there the entrepreneur can do what he or she does best, which is think of new ideas to capitalize on those opportunities and take the business forward.
Thank you, Shashank. Yes, please.
So what Sashank mentioned and what Rajan also mentioned, right? So I think one thing we importantly miss out as entrepreneurs is like हम लोग के सब लोग के किसी भी ये ब्लड की प्रॉब्लम होती है, ब्लड प्रेशर रोज चेक करते हैं घर पे, डायबिटीज होती है, डायबिटीज चेक करते हैं, राइट? सो एज एन एंटरप्रेन्योर वी ऑल हैव अ मैट्रिक्स ऑफ मैनेजिंग दी सेल्स, वो बिजली का बिल कितना आया, एवरीथिंग स्टफ लाइक दैट. But how many of us do we really manage or calculate the working capital? It's a very easy thing to do. It's like because it's the lifeline of the business. Like working capital is the lifeline of the business. When we go to a doctor, the first thing doctor says is go and do a blood test, right? So if you go to a financial analyst or somebody in E&Y, first thing they will do a cash flow analysis, right? So I would always recommend as an entrepreneur, we should be managing the working capital with small ratio analysis in terms of what is the working capital. Maybe current assets ratio, current, quick ratio. They are very simple tools which we can maybe discuss some point of time. But these are very important parameters to see how the working capital health of the business is there. Because हम generally balance sheet बनती है after a period of time, and unfortunately working capital is one capital which cannot be seen. You can't see a working capital, it's adrish capital, so it's very important to keep a pulse, just like blood body में घूम रहा है जब तक दिखता नहीं है अपने को, similarly वो जब तक तकलीफ नहीं है तो दिखती नहीं है, so it's imperatively very important to keep a tab of it. There are very small tools, ratios which you can do, so I would recommend that please make sure you manage your working capital with these tools and tricks. Thank you.
Thank you. I think time is up. Can I open the session for open house? Any questions, please?
Just a small question. In India, what I've observed is, suppose there's a limit issued to an entrepreneur. I'm not talking about automobile, all the industries. A second bank would approach that entrepreneur and say, "यार 2 का है, आप 3 crore ले लो." And then what happens is that we see that the company which is into manufacturing becomes an NBFC by, उसका उधार बढ़ जाएगा, या उसका जो working capital है that goes into non-productive ways. And we see a lot of businesses becoming, turnover to उतना increase नहीं होगा. Suppose if he is doing turnover of 100 crores or 2 crores as working capital, and we see when it is 3 crores, the turnover is not 150 crores, it is 110 crores or 105 crores. देखते हैं कि उधारी बढ़ गया है, other non-productive assets में allocation बढ़ गया है. So how can the banks monitor and see whether the fund which is being given for the end utilization is being done in a proper way and the company is not becoming lazy and depending कि नहीं easily credit available है, and then what happens is when the interest rate go up, they don't have a model to predict the interest will go up by 200 basis points in next 1 year or 2 years, and then they start losing money. So that's my question.
I take this question. So you are saying you are lured by a lot of money, and you got lured and enticed, and somebody from outside will tell you why you should get not lured.
It is
a question.
I'll give you an answer. It is about
somebody is sowing greed in your mind.
Exactly. The requirement of money is always there for
so moral compass has to come from a banker. No, I'm just understanding. But to give you a little on a serious note, the answer, yes. I'm saying is few worthy customers. Every bank wants them to be in the portfolio. So there is no doubt. But as a regulation, I want to tell you, this Krillic information, where we pool all the information of all the banks, is one healthy step which our regulator has started. Second thing, as a regulation, this recent, there are 5 versions of the current account circular of a regulator where they are mandating beyond a particular turnover, you have to work with one bank is a very positive step in that fact. What you are asking for is that not many people should lure, I'm saying serious, credit-worthy customers like you. So as long as you work with one bank, he will take care of your health. He will not give you more finance than what you want for your aspiration. That's a step forward to the regulation. Otherwise, self-control is the last answer, which I'm sure everybody knows I'm saying it, but the simple thing is very difficult to observe. But click information and this RBI current account is surely a step forward of what you're asking for.
Another point, Mr. Rana, I think that due to digitization, a lot of data get checked from each other, so there is no black spot or gray area for bankers now to evaluate the borrower. Is that right?
100%. So one thing I want all of dealer members to look at, see by a small guesstimate, this industry will have more than 1 lakh crore of a credit requirement from all the bank and a financial institution by year 2030. A lot of people in the past have managed their own money, but can they manage their own money in the next 10 years? There are a lot of questions around it. Maybe only 1% dealer can, 99% can. So it's imperative for all the dealer community to have a very healthy relationship on their credibility with the bankers, because that's how the dealership will thrive, that's how the nation will thrive. And we all know the density of the dealership is not going to compound as much as it has been done in the last decade. We all know that business. So if businesses has to survive, remain, I'm saying is existing, so there has to be the healthy practices, the way any bigger companies work. You all have to start thinking and working like that. That should be the aspiration of all these dealerships. We all have our models to emulate in life, but we all are becoming. It's like all top-end car features are coming to a lower-end car features, and we all love it. That's not going to all the top-end best practices has to come to the MSME also now, and people have to love it. And it comes through a sustainability.
Thank you, Mr. Rana. I think we are done.
Yeah.
There's a question.
Just one question to the panel. There is a lot of digitization as I think all our transactions today, either through e-invoicing or our GST returns, are now totally in the public domain. How do bankers or financiers see this aspect, and what do you recommend to dealers on how they should be prudent and how they should, what should change in their way of working, what was done earlier and how it should be done now?
So I think one more very important thing which is happening right now is called account aggregator. So the government of India has started a concept called account aggregator. That's a new category, and fortunately we are partnering Sehmati, which is, so what UPI was to payments, OCAN is to credit. And in the first week of May, the government is launching on a soft basis lending based on your GST data. So it's called GST Sahay. So it becomes very important for every entrepreneur to digitize their records, use the best available technologies. So with e-invoicing in place, all the, in fact, the integration between the DMS to the accounting softwares, from GSTN to the account aggregator. So entire data can be pulled up within a fly, and gone will be the days when we will be taking photocopies and signing those things, and then there will be a question, authentic or fraud. So we also like to pull up the banking data from the banks, GST data from the GSTN, and government invoicing data from GEMS. So digitization is very important, and secondly, that's one thing which is going down in terms of pricing. The cost of technological innovation and using this technology is going down. So it is becoming a mass market, as you said, for what's happening for the corporates will come down to the MSMEs. So it is time that we all adopt technologies, digitization, to the best possible, effort and take it to the next level.
Thank you, Ravi.
Thank you.
So, I'll answer the question.
Time is up. Thank you. Thank you.
Thank you so much, sir. May I now request Shri Ritesh Mamodia to please come and felicitate Shri Bhaskar Karkera ji. applause for him. I know the house is a little tired now, but then I now request Mr. Ashok Mittal to. Can we have a big round of applause for the minister?
Thank you.